So good morning and thank you for joining us today. I'm Jane Morgan, the Investor and Media Relations Manager for Laybuy. Yesterday, we announced that we had signed a merchant partnership agreement with the UK's largest independent retailer, The Fragrance Shop. To run us through the release, today we are joined by our Managing Director, Gary Roloff. To ask a question throughout the presentation, please use the Q&A function at the bottom of your screen. I will now hand you over to Gary.
Thanks very much, Jane, and good morning, everyone. And thanks very much for joining this webinar this morning. Look, the announcement yesterday of the Fragrance Shop is a major milestone for us in terms of what we are able to do with them both online and in store. The Fragrance Shop has somewhere around 200 stores across the UK. They transact both online and in stores somewhere north of £150 million. And we are an exclusive partner of theirs in store for the first 2 months as we roll this solution out. So a very attractive retailer for us to get alongside. That, coupled with the exposure we get from our tap to pay solution within WH Smith's 900 stores across the UK, helps just emphasise the brand of Laybuy as we look to roll out our tap to pay solution across the United Kingdom. The thing we're very proud of with what we've achieved up in the UK is the fact that we have carved ourselves out a credible third place position in that market behind the likes of Klarna and ClearPay, Afterpay's 100% owned subsidiary. But there's daylight between us and whoever's fourth, fifth and sixth. We have really cemented that position in that market. We have focused our growth on the UK and we continue to deliver against that growth. For example, in our Q1 results that we've just released, our GMV was up 107% against that same quarter prior year to annualise just on 400 million Kiwi. So when I have spoken to shareholders over the past few months, we have talked about the UK being our growth engine, and it continues to be, and we continue to deliver against that. By way of example, we've just added 222 new retailers in the month of July. And with the rollout of our affiliate program that will go live towards the end of this month, early next, we are adding just under 200 of the UK's most recognised brands. Those of you who may have seen our Q1 announcement will be familiar with the brand names we're bringing on board. The likes of ASOS, Marks and Spencer, B&Q, Amazon, eBay, to name just a few. And that will help us really drive that breadth of offer to the consumer base that we have today and that we continue to grow through our marketing efforts in the UK. We haven't forgotten New Zealand and Australia. It's still an important two markets for us. And the merchants we've signed up over recent weeks include the likes of Board Riders, EB Games in store, Adore Beauty, and Subi. So we've got a number of very iconic Australian retailers starting to join the Laybuy platform as well, which just gives us further impetus in that very large market, which is Australia. I've said on many occasions that Australia is a Red Sea of competition and that our focus for growth continues to be on the UK, but that is not by way of ignoring Australia. It's just recognising that our time, effort and money will gain a better yield in that growth market, which is the UK, over what is becoming an increasingly saturated market in the from an Australian perspective. To give you a sense of the size of the prize in the UK, the market is around £400 billion at retail, of which somewhere around £150 billion is supermarkets. So you're talking about a total accessible market at retail of about £250 billion, and buy now, pay later penetration at last research data that we have would suggest the penetration is about 3 to 4%. So you can see the runway for Laybuy in that UK market's enormous, and that's why our focus continues to be on that market. So look, I'll hand you back to Jane. I'm very happy to answer whatever questions you may have. And Jane, over to you, and we can see how we go from here.
Perfect. And again, please use the Q&A function at the bottom of the screen if you do have any questions for Gary. This one's has come through actually quite a few times, Gary. So can the company explain the disconnect between the market cap of Laybuy when compared to its Australian listed peers? So for example, comparing Laybuy to Splitted on every metric, this webinar attendee has just said like Laybuy is far superior, tracking at 40 to 50% higher on most of these, yet the market cap is 50% of Splitted. So where is that disconnect?
Jane, I wish I knew. You know, we have doubled the size of our business and more since IPO. We have watched our share price come off by nearly 75% over that period. And as the largest shareholder, our family certainly feels the impact of that. And it's incredibly frustrating. You know, your questioner has pulled out one of our competitors. I look at a series of metrics across all our competitor set, and I'm left wondering what on earth Laybuy needs to do to gain the recognition of just how well we have done in this market and how well we continue to do. By any comparator, we are well under our competitor set. But for me, my focus has got to be on growing the business. I can't control what the market does. I may be very frustrated about it, and I can assure all shareholders I am, but my focus is squarely on, as is the rest of the team, growing the business, delivering and over-delivering on our numbers. And at a point in time, one would hope the market recognises us for the size and success that we are.
Thanks, Gary. There's quite a few on the growth strategy. So one, as Laybuy's growth strategy is aimed at the UK market, has there been any attempt to get UK growth or tech funds invested in the stock?
Yes, look, we have talked to a number of various funds across the UK. One of the barriers has been for some funds, they can't invest in tech businesses outside of the UK, and we are ASX listed, obviously. The other area that we found when we first got up to the UK, and for those of you who aren't aware of that story, no one was doing buy now, pay later as we know it when we arrived in the UK in August 18. Klarna had a product, which was a try now, pay later product, but not a buy now, pay later as we know it in this part of the world. So the education process we have had to go through has been quite unique. The growth of Klarna and ClearPay's presence in the market has helped that education process, to be fair. But we are a small business, relatively speaking, for what some of these funds are looking at in the UK. The fact that we have now carved out the position we have carved out is proving to be interesting or more interesting to those funds. And we are having a variety of different discussions in that market.
Perfect. Look, there's one on the competitive landscape. So Zip recently put out their UK figures in the last quarter. This user said that they were very poor. So are you coming up against seeing Zip in the marketplace at all, or are they having an impact on Laybuy?
Look, I have the greatest admiration for Larry and the team at Zip, but in the nicest possible way, we haven't seen them at all.
Easy one. So there's a user that's just asked, I see that Citibank is launching a new buy now, pay later spot in Australia, and how do you think that they will go?
Look, I think it's like anybody looking to launch a buy now, pay later in Australia. You better have deep pockets and you better have a customer base that you can talk to retailers about, because retailers are very savvy in all markets, particularly in Australia, where buy now, pay later is very commonly used and people are very much aware of. Let's just see how they go. I mean, I've always said that competition in anything you do is great because it forces you to be better every day. So I've always taken a view, given we come out of New Zealand, that we've got a box above our weight anyway. You'll note for the Australian listeners, I haven't mentioned the rugby, Jane, so we won't go there. But look, in all seriousness, let's just watch the space.
We'll still want to the competitive landscape. So are you concerned by PayPal or traditional banks entering the space? And do you see increased competition now that Square have acquired Afterpay?
Look, PayPal has, it's not new news that PayPal is entering the buy now, pay later space. And, we commented when that was first published that, look, this just validates the sector. And that since the announcement of Square acquiring Afterpay, if anybody thought buy now, pay later was a fad, they better rethink pretty fast, because buy now, pay later is here to stay. The increased competition doesn't bother me at all. We have demonstrated our ability to live in a very competitive environment, which is New Zealand, and thrive. We have made very value-based decisions about how we want to pursue growth in the Australian market, and we've demonstrated an ability to perform in the face of some pretty significant competition in the UK. So, I'm not too worried about that.
Okay, here's another one that's come through. So I'm jumping around a fair bit. There's quite a few coming on. But so can you comment on your market share in Australia, New Zealand, and the UK, and who ranks first to third in each market in the buy now, pay later space? And secondly, are the markets growing at the same pace?
Yeah, look, we look at New Zealand, where between us and Afterpay, we would dominate the market in New Zealand. And I think between the pair of us, we have somewhere around 75% market share. And look, we were ahead of Afterpay in the New Zealand market. We were able to maintain our position as they came in, and look, we just continue to live in that space. We've demonstrated that we're still growing in the New Zealand market by about 30 to 40% year on year, and we are continuing to bring on new retailers. So New Zealand was always, for us, you want to own your home market, and we feel like we've achieved that. From an Australian perspective, look, there is the dominance of Afterpay and Zip. I would argue that Laybuy is a pretty credible third or fourth player in that market, in amongst a number of other players. We continue to attract interest from some of Australia's most iconic retailers, and we will continue to do our work over there. We've got an outstanding team, Sydney-based, who just do what they do. From a UK perspective, we are number 3 in that market. I'm not going to try and gild the lily. We're a distant third to Klarna. Let's be fair, they are a monster up there. But the reality is, Laybuy up against ClearPay and Klarna has certainly competed and continues to compete. And we sit alongside both those brands in a number of major retailers. The affiliate program that we're about to roll out will scale our business from a merchant perspective from the current circa 3,500, and we will add a further 5,000 between now and March of 2022. So, we will see some big scaling on our merchant numbers over the next short while.
There's just one on affiliate marketing that's come through. So can you please expand on the potential financial impact of the affiliate marketing deal?
Yeah, look, I think unquestionably, when you start to open the opportunity for consumers to shop at some of the most iconic brands in the UK, we're going to see a significant uplift in our UK numbers. We are still on track to do 1 billion Kiwi this year. And I think it's fair to say anyone who's read our numbers can see that we're dominated by the UK in terms of our GMV. So if you think about where we landed last year with GMV equal to around 300 million New Zealand dollars, it's fair to say that we are focused very much on trying to increase that, trying to at least double that, if not more.
Gary, you actually covered this earlier, but potentially this user didn't see. So it is clear that Laybuy is performing well in the UK, being the third largest buy now, pay later in the region. How much potential still remains in the UK?
Oh, look, that's a great question, and one that I kind of touched on earlier. But, buy now, pay later penetration in the UK is probably around 3 or 4% of retail. And buy now, pay later is in its infancy in the UK. It is a very new method to pay. The opportunity that both online and more recently for Laybuy in store offers up to us means we've got a heck of a runway there. And I just see that as a market that if we continue to put our focus on, we will grow our presence there and maintain and increase the share of market that Laybuy has. But I think there's a long runway ahead yet.
So just on merchants as well. So growth in merchants has almost doubled just in the past year. Can we expect this trend to continue?
Yeah, look, based on what we're going to do with the affiliate program, once we activate that, we're bringing on, as I said, 200 of the most iconic brands in the UK first up, and then we will grow that affiliate program to include up to 5,000 or more brands between now and March 2022. So if you take those numbers, we'll take our active merchant base from about 3,500 well through 5,500, closer to 8,000, provided we are good at what we do and activate the merchants we bring on. And we've got to back ourselves to do that.
Again, another one that's come through a few times. So the recent Square acquisition of Afterpay is a major milestone for the buy now, pay later industry. And we know that you have mentioned this, but where does Laybuy fit into this? Where do you see Laybuy fitting into this?
Well, I think Laybuy becomes actually very attractive as a company for those that don't have a presence in New Zealand, Australia, and the UK. Because getting a foothold in the UK, you mentioned one of our competitors in an earlier question that has not done so well of recent times in the UK. It's hard. The UK is a tough market, and we've carved out an active merchant base of 3,500 in just under 2 years. And so I think Laybuy is very well positioned to be of interest to other players in the buy now, pay later market.
Okay, so with excellent growth in all regions for LBY, should we expect a possible move to the US?
Look, I think everybody looks at the US as the holy grail, and you've got to be in the US. If I could wind back the clock, and Jane, you and I have spoken about this before, we were listening to suggestions from the market that we should have a presence in the US. We announced that we had a beta test over there, and the market punished us because they said, you're going to need a lot of money to go into the US. With the benefit of hindsight, we would have done that under the radar and just ensured that we had a capability and could lay that foundation. I don't think a move into the US for Laybuy is something that we want to consider anytime soon, given the runway and opportunity we have in the UK. I'm all for ensuring we've future-proofed the business, and so we can lay a foundation to ensure that we are ready and able if we should choose. But right now, our focus is squarely on the UK, and the US is not something that I think is a smart play for Laybuy in the near term.
Okay, another one's come through. So what degree of sensitivity is there for Laybuy in regards to interest rates movements, i.e. on balance sheet working capital requirements?
Yeah, look, interest cost to Laybuy is a very, very minor part of our cost of sales. When we first started this business, interest rates were significantly higher than they are today, and the unit economics were not impacted then, and they won't be impacted by some minor interest rate increases that may occur in the near term. Now, I'm not worried about that. It's not that sensitive to interest rate move at all.
Okay. And can you comment on your available capital and cash to support your growth ambitions?
Yeah, we've recently raised capital, as the market's aware. We have been working with our Australasian funder, Kiwibank, and have had a very positive conversation with them just last night, as it happens, to improve or increase the facility that we have there. We have a term sheet in front of us for a facility to replace Victory Park Capital. That is one that we are negotiating right now, but it is a very good deal for Laybuy, and one that we will be certainly looking at whether or not we can pursue. I'm very comfortable with where our resources are for our growth trajectory over the next 12 months, and we've demonstrated that in our last 4C as well. So yeah, I'm pretty comfortable where we're sitting at the moment, Jane.
So just further on the affiliate program, when does the affiliate program end, and do we get to retain the 5,000 merchants post-contract?
There is no end to the affiliate program. It is part of, there's no drop dead date. And yes, we do get to retain, replace, add whatever we want to do with the merchant. So yeah, look, it's not a, oh, we put this in place and there's a drop dead date. This is what it is, and it just creates that opportunity for us to offer access to those retailers for all our consumers.
Just another one back to the UK. So what's the current progress on the tap and pay program?
Look, we've just launched that with WH Smith, and we've got a number of the JD Sports brands rolling out. The fragrance shop has circa 200 stores that will roll out. The UK, as everyone will know, has only recently come out of a severe lockdown. It's summertime up there right now. A lot of people are traveling, a lot of people are spending their discretionary income in the pubs and restaurants. But we see that tap to pay is a significant part of who Laybuy is and who Laybuy becomes over the next coming weeks and months, particularly in the wind up into Christmas as well. So we're pretty excited about where tap to pay goes for us.
Can you comment on the strength of the executive team at Laybuy?
Yeah, look, I think we've got a really strong and passionate team that we're always looking to add to. The executive team has been, many of that team has been with us over some period of time. Remembering, we're only 4.5 years old. I think we've got a really strong team. We are looking to add that bench strength and have recently added some. And we will continue to grow the capability of our business from within and by bringing in new expertise as and when we need it.
We've got time for just one more. So coming off the back of a very strong quarter, what should shareholders be looking forward to news flow wise in the next few months?
Oh, look, I think definitely the go live of the affiliate program is something that we will be certainly keeping investors informed about. We'll keep investors informed about the facilities that we are going to pen in the near future. And we've got a number of other retailers via direct integration that we'll be sharing with the market as and when that documentation signed and we have a fix on when they're coming on board. Jane, I've just got one question that's come through the chat. I'll just repeat back to you as CBA is cutting fees on Klarna transactions in the next 6 months to help drive penetration prior to Klarna listing. Do you see that as an issue? No, I don't. I see that the fee structure that they're proposing post this free period is significantly higher than what we charge. So, look, I come out of a retail background. If you have to compete on price, you're really going to lose because price is not a differentiator. Someone's always going to come and do you cheaper. So, no, I'm not worried about that. Bring it on.
Perfect. Well, it looks like we have covered all the questions. A copy of this recording will be available online in the coming days. And if you do have any questions that we have missed, please feel free to use the contact details on the bottom of our ASX releases. But thank you all for joining us today.